How can you invest in real estate without building or buying a property starting with just 15 euros? In today's video, I will answer that question. I'm going to explain in details how you can invest in real estate through the stock market using something called REITs. So in this video, I will explain what REITs are, how you can make money by investing in REITs, what you need to pay attention to when choosing a REIT, a real example of REITs you can start investing with as little as 15 euros. Hi there, welcome to the Rich Pocket Podcast. My name is Hawa. I am a finance educator, and on this channel, I talk about personal finance, investing, passive income, and building wealth in Europe. If you're interested in these topics, make sure you subscribe to the channel. So first, what is a REIT? So REIT stands for Real Estate Investment Trust. A REIT is a company that owns, manages, or finances income-producing real estate, such as apartments, office buildings, hospitals, shopping center, student housing, and warehouses. So instead of buying and building a property yourself, you buy shares of a REIT on the stock market. When you invest in REIT, you are investing your money into a real estate company that is listed on the stock market. So that company uses investors' money to buy land, build or purchase properties and rent them out, or sometimes just sell them. So by law, most REITs must distribute at least 80% of their profits to shareholders. So if you're a shareholder, you receive that profit in the form of dividends, which can be paid monthly, quarterly, or yearly. So how do you make money with REITs? There are two main ways you can make money with REITs. The first way is through dividends. So you earn regular dividend payments simply for earning the shares. The company pays you money monthly, quarterly, or yearly as long as you do not sell the share. So the second way to make money with REITs is through share price growth. If the REIT, meaning the real estate company, grows and becomes more valuable, the share price can increase. If you decide to sell the share that you earn at higher price, you then make a profit. So how do you start investing in REITs? To invest in REITs, you need to open a brokerage account. There are many investment platforms available in Europe. One popular option with relative low fee is the Xior. Through a brokerage account, you can buy individual REIT stocks, which means you are investing in one company. You can also invest in REIT ETFs, which means you are buying a group of real estate companies at the same time. For beginner, it is usually better to start with ETFs because they help diversify risk. So when a REIT pays you dividends, you have two choices. You can reinvest the dividends to buy more shares, meaning you take the money you earn and use it to grow your investment, or you can choose to withdraw the dividends and use the money. Please note that depending on your country, you may need to pay taxes on the dividends you receive because governments consider dividends as income. So before investing, it is very important to analyze a REIT properly. The first thing to look at is the type of real estate. This can be healthcare, residential, logistic, offices, or retail. So this is important because different type of real estates perform differently during economic cycles. For example, healthcare and residential properties are usually more stable than offices or retail. The second thing to look at is the dividend yield. The dividend yield shows how much income you earn per year compared to the share price. A very high dividend yield can be attractive, but it can also be risky. So you should not buy a REIT only because the dividend yield looks high. Next, you should look at the dividend history. Here you can check whether the company pays dividends regularly and whether it has a history of stable or growing dividends. This means the money you receive every year should stay consistent or increase over time. Now let me give you an example of REITs that pay dividends. Please note this is not a financial advice. My videos are not financial advice. So always do your own research after listening to my videos. It's very important before you start investing. So the first company we are going to look at is Montea. Montea is a Belgian-based company. is primarily engaged in the public property, in particular logistic property in Belgium, the Netherlands, and France. It generates income through real estate assets, development projects, and solar panel. So let's look at how much they pay as dividends. So the company pays you €3.74 per share. And the last time they pay out dividend was May 23rd, 2025. So if you buy one stock of €73.30, you will be paid €3.74 per stock per share. So next company we are going to look at is Xior. So Xior is a student housing REIT which is based in Belgium. The company is active in the field of residential real estate. The company's offer is mainly for students. Now let's look at how much you can get for dividend. So the dividend date, as you can see here, is May 22, 2026. So this is the date that the company has announced that is going to pay out dividend. So if you already have shares from this company, you are going to receive €1.27 per share. And if you don't have, that means you have to buy share from them before this date. So the price for one share is €28.60. So the next REIT is Retail Estates, which is also based in Belgium. The company is specialized in owning, acquiring, and managing businesses, real estate properties. Its portfolio is centered around suburban retail properties, including local shops, private buildings, shopping centers, and other commercial venues. So if you buy this REIT, you are going to get €5.10 per share. So how much is the share? Share price is now €6.70. And the last time they pay out dividends was June 2nd, 2025. So this looks like a company that pay out dividends yearly. So for example, if you own 1,000 shares, so that means you have to take 1,000 times €5. So that is 5K, which is a lot of money for just passive money you didn't really work for it. So the next company is Xior, and this company is also based in Belgium. The company aims to provide affordable housing to vulnerable population over the long term. So the company is specialized in the rental and operation of the residential real estate industry. So let's look at how much they pay out as dividends. So we have here 82 cents per share. So if you buy share, you have to pay €18.45 per share, and then you receive 82 cents per share. Last time they pay out dividend was May 26, 2025. So the next company is Xior, which also known as Xior SCA, is a Belgium-based real estate investment company. Its investments are mainly focused on properties in the retail and warehouses sector and the food industry in Belgium and also in France. Majority of its holdings are situated in Wallonia region of Belgium, also in Flanders, in Brussels, and in France. The company's clients include Carrefour, Champion, Decathlon, Deleuze, and others. So they pay out as dividend €4.45 per share. And their share price is €51.80 at this moment. So if you buy one share of €51.08, you will receive €4.45. And as you can see here, the dividend date was February 5th, 2026. So they just paid out dividends, which means you just miss it. So they just paid out dividends. And the payout ratio is 82%, which is really good. So the higher the payout ratio for a company, the better. So another good company is Cofinimmo, which is also based in Belgium and is involved in acquiring, developing, and managing rental properties. The company focuses on creating and maintaining care, living, and working environments that directly enhance the well-being of their occupants. So this company is mainly engaged in healthcare real estate, comprising of nursing homes, rehabilitation center, and other healthcare facilities. So let's look at how much they pay out as dividend. So they pay out €6.20 per share as dividend. So the last time they pay out dividend was May 19, 2025. So meaning that they pay out yearly dividends. And so if you want to buy one of their share, you have to pay €88.15 per share. So if you don't want to invest in individual companies, so one REIT, you can also invest in REIT ETFs. So when you invest in REIT ETFs, you are investing in different companies at the same time. So different real estate companies at the same time. This is a website that has different ETFs. So not only real estate, but also equity, bonds, commodities, and so on. So what you need to do if you are looking for REIT ETFs, you have to click on real estate, and then you have here 8 options. So the first one is the famous one, the iShares European Property Yield ETFs. So if you click on it, you will see that you are not only investing in one country, you are investing in different countries in Europe. So that's why the name of the ETF is iShares European Property Yields ETFs. You can also see here how much you will get as dividend. So they pay out dividends 88 cents per share. And if you look, the total return that you will receive per year is around 8%. So if you invest in this ETF, you are investing not only in Belgium, for example, you are investing also in France, Germany, Switzerland, Sweden. So this is a REIT which has properties everywhere in Europe. Okay, so you are investing in Europe, which is really good because you're not only focusing on one country. So if you open your investment app, then you can search for all these options, so all these ETFs, and you can also start investing on. Here is another example, Van Eck Global Real Estate ETF. So this one, you're not only investing in Europe, you are investing everywhere in the world. So you are investing in the United States, Japan, Australia, United Kingdom, everywhere. And they also pay out dividends, which is around €1.38 per share. Thank you so much for watching until the end. If you enjoyed this video, you may also enjoy the video I've linked above. If you want to learn more about REIT investing, you would like more information about this, you can always book a one-on-one session with me using the link in my bio. I'll see you in the next video.